All right, we back once again. Oh my gosh, I got wrecked, and I'm going to tell you how. And we'll go over some T levels, indicators as well. But how I got wrecked was being cute. I was trying to be cute, and when you're in the market for so long, and you kind of know the way the market makers work and what they're trying to do, you start to get a sense of what's going to happen. And here's what happened. I'm coming into a CPI here long. Okay, I've got a long position sitting around here, around this zone here, and in my mind, I think it's a low risk setup to play the buy stop flush essentially. So I already know they're going to try and flush this higher, no matter what. I mean, I'm pretty sure that if we are going to sell, it's not just going to sell off. They're going to run it higher first and sell it off. That's just the way it works. And so, and folks that have been in the market, you see this all the time, especially on reversals. We'll probably start seeing more of these too in the coming days, this type of move. But the rug, which is my specialty, I love the rug, but I didn't play it right, and the reason was because it spiked up and it happened so fast that I hit close. I was up about 30 points or something. I hit close, but what it did was it closed my stop loss out, my stop limit order, and it didn't fill my long position. And so by the time I realized what had happened, I really actually wasn't sure. It had eliminated my stop because I hit close. I don't know, maybe I should have hit flatten or something. Somebody might out there might know the technical reason why I got killed here. But by the time I realized what had happened, we were already trading like 80 points down. And I was just sitting there, wait, what just happened? I'm down like 80 points. I was just up 30. I hit close. It should have sold, and it essentially eliminated my stop, and it left my long order in there. And by the time I realized what happened, I was just like, okay, whatever. Okay, I obviously screwed that up somehow. And so yeah, don't be me and try to be cute. I should have just left a limit order up in there and just not touched it. Let the limit fill. Um, I was I was trying to feel it out, but that happens so quick. You hardly ever see a spike up and sell off that fast. The folks that have been trading the markets, for a couple years now, and you've seen these moves. They typically it'll kind of spike up and kind of hang out there for a little bit, make you think, hey, maybe this is a spike up. Get some folks to get long, take out some stops, and then they'll hit you with the reversal. But that one just happened so fast, like they couldn't wait to get out. And you can see what happens too. They couldn't wait to get out, and then it was just basically sell, sell, sell all day long. And don't be me and don't make those mistakes. But anyways, the reason I saw what was about to happen was this rug and the spike up was because the sellers just dried up here. I mean, there was no sellers into the CPI. They basically, the way I always think of it is like they're kind of stepping back and letting the bulls, get a little antsy, and I could see it happening on Bookmap, because I watched this Bookmap here, and I'm just kind of seeing the orders coming in. I could see people just little guys buying, and so the sellers step back, creates like a vacuum for the buyers. Then they hammer them on the next bar. So this is what I should have played. This is what I was expecting to happen, and I should have just waited for this move instead of trying to get cute and play both sides. So don't do that. That's a mistake. That's noob material. Anyways, so the T levels played out really well. Looking at the expected move high today was sitting here at 41.86. We didn't even quite reach that. We're at exhaustion levels. For these T levels are really cool because they have exhaustion levels built in. You can see the different levels here. So I've got the exhaustion and extensions, and then the daily. So you can see which ones those are. And I'm highlighting this one again because it's one of my favorites. But we'll just throw the daily on there. So here's your daily levels, and then your extensions, then your exhaustions. Okay, so those are basically all of those. And then you combine that with the expected move. So you can see where we ended up was not quite the exhaustion levels, but we were at the extension levels and into the expected daily move. So you got a little confluence there for a high a day. Perfect to just trap a bunch of bulls, right? And so they trapped everybody basically for 3 days, and then they gave it all back. And we're probably going to just continue to move lower where we should have been doing for the last couple months, really. That's T levels. I really like those. I'm going to start using these conviction sticks. I just like this cloud here. I think you can get something like this for free, but it doesn't have these. It doesn't have the conviction bars in there. So the conviction bars, when it goes red, and you got the red cloud, essentially, that the trend is lower. The trend got a little bit, neutral here as we went flat, and then it continued lower. So I like using that. I like the expected moves. I like the T levels. I'm going to be using those a lot more. And then I love the volume. I use something like this on my own. I use there's a free version of something like this with Backtest Rookie. And so you can add that on there, and it's something similar. You're going to have to mess with the settings a little bit, but it sort of acts the same, and especially intraday, and you can kind of see where it sort of looks the same. But basically it's just tracking the buy and sell volume versus, against each other. So you can see who's kind of in control of the market. You can see what happened here is we sold, and then the sell volume dried up. There just weren't enough buyers to reverse it. You can see that happen intraday. Buyers went away, the sell continued. So using those as confluence with each other, the volume, conviction sticks, you got the market, expected high, and then you got your T levels here, which are just sort of like context pivot points is what I like to think of them as. Hey, are we overbought, oversold on a, with regards to an average daily move? And today was an average, so I had a really good feeling that we were going to break this low after I attempted a few buys here, and they were just not having it. So the V-shaped recovery was not coming as far as I could tell. So we were headed much lower, and based on today, I think the move is going to be way lower, as there are a lot of weak hands that have been buying these dips. In my opinion, I do not think the buns are in here loading the boat, as evidenced by the beginning of the month when we had those 401k flows, gave it all back the next day. It's going to be a similar situation where it's not funds in here buying every day, in my opinion, for the long term. So it's going to be a lot of weakness in the coming couple weeks, in my opinion. So anyways, if you like this video, make sure to like and subscribe. I don't get anything if you use this T level, so this is all because I like the indicator, and two, they haven't given me a referral link, which I don't really care. I just like the fact that they let me use it. And so if you do like it, go to tlevels.io and sign up, and then make sure to subscribe to this channel. See you next time. Peace.